In this video, guys, we are going to look at matching your trading style to your personality. Stay tuned. Hey traders, warm welcome to you. All right, so it's really a selection of different traders in there and watching traders progress. We're doing completely different things. Super active scalpers, guys who are trading swing trading, people who are day trading one specific market with an indicator-based approach, people who are trading momentum. It's really interesting to see, and there tends to be no real correlation as to who's doing better than anyone else, but what is interesting is that the people who seem to be doing better are the ones that are matching their personality to the trading style. Okay, and that doesn't necessarily mean, oh, I like making quick decisions, I like getting quick profits, I'm a scalper. No, it's a little bit deeper than that. So let me explain what I mean. So really we've got three broad styles from a trading perspective, right? We've got scalping, we've got day trading, we've got swing trading. And generally speaking, we go, well, if you like making quick decisions, you're good at making quick decisions, then you're a scalper. If you prefer to you don't want any overnight risk, you're really a day trader. And if you like to kind of hold trades and take more time to make decisions, then a swing trader suits you. And that's true to a certain extent. But let's go another level to that. The other level is the risk that your personality has in sabotaging your trading. So if you are a personality type that gets very frustrated, gets angry quickly, and you could be objective here and kind of say, hey, listen, I need to just look at this through the lens of everybody else. If people are saying, hey, you've got short temper, perhaps, you get frustrated, your ego gets in the way of things sometimes, maybe a bit too aggressive when you try and do stuff, then you might say, well, that's great for scalping, but actually, unless you contain that, that's the worst possible personality type to be a scalper. And very often those are the people that gravitate towards scalping. I want it now, I want to make the money, I want to be quick, I want to be in it now, I want this, I want that, I want to trade size, I want this and that. And actually, they become great scalpers if they contain the side that blows them up and puts them on tilt, because that very positive aspect of the personality that helps them make those quick decisions, see it going, I'm in, add, out the aggressive side of stuff that allows you to be a good scalper is undone. But when things don't work, you're like, oh, I'm not closing this trade, or oh, I'm frustrated, or I'm not going to do this, and the anger that comes into having a trade that goes against you, and then at the end of the day you end up losing loads of money on a trade, you end up losing money in the day, and that far outweighs the skill that you've got and the ability you've got to kind of press the throttle down on things and make those quick decisions. So sometimes if you're in that situation, you go, okay, I believe I should be a scalper because I like it in this. Maybe it's stepping back, because actually if you're just completely forgetting about, you completely focus on the positives and not looking at the negatives and saying, actually, those negatives are undoing all that positive work. And I either have to work massively on the personality part of it and the discipline and get that nailed in, or do I need to do something that just actually resonates a bit better with me? And I can still utilize that work ethic and that aggression and all that other stuff in a higher time frame, just not from a training perspective. I can put it into my journaling, I can put it into my process, I can put it into my checklist, I can put it into my pre-market prep outside of trading. So it's often thinking that way and being one step further back and saying, well, this is why I should be a scalper, this is why. Think of the reasons why you shouldn't, or I shouldn't be a day trader or swing trader. Because very often it's the losses that undo us rather than the profits. Many traders, if they halve the losses, could significantly change their results. So we've got three styles: scalping, day trading, swing trading. And then from there, you kind of got mean reversion and momentum. Now, some people trade both, but some people have a propensity to do one than the other. There's traders who will just wait for that extension, that mean reversion intraday. There's traders who will only trade with the momentum after a gap in a specific stock. Let's look at some of the different kind of ways people trade stuff. We've got indices, obviously stocks, new stocks, FX, crypto, commodities, etc. You've got traders who will screen for active stocks and then trade those intraday. So it's very aggressive. It's trading a different instrument each day normally. It's a news-based approach. It's very active. That's great if you can make those quick decisions, but if you're wrong, sometimes it can magnify the worst sides of that personality. Others who trade one asset continually, so they like the familiarity. If you feel like you're someone who can get in tune with the market, understand the nuances and subtleties, then just trading one market might be for you. If you'd like to become that specialist, if you like something new and fresh each day, then maybe screening for active stocks is better, but you kind of use a specific pattern. And so there's so many different ways to do it. And some people focus on mean reversion, which is kind of counter trend. Some people trade momentum. And really, we've got multiple iterations of these, multiple iterations. But the key is to picking one from each section and becoming good at it before you add the next. So you might say, yeah, but Mark, mean reversion and momentum. I want to use them in the same way, the same thing. And there's a fair argument to that. There's a fair argument if you're day trading, you want to be able to trade mean reversion and momentum. But my counter to that is, why not get good at one? If that means not trading for a day or two and waiting for your specific opportunity, then leverage on that and so be it. And say, hey, I'm a very good mean reversion trader. I want to become a day trader trading mean reversion in the indices, right? And even then you can go further and go, I'm going to trade NQ, or I'm going to trade DAX, whatever it is. So now you know exactly what you're looking for specifically, and you can become good at that. And if that means that you reduce the frequency of trades, that's probably a good thing. And then when you start to say, hey, this is working for me, I'm doing okay, I'll now add some momentum plays in, or I'll add some more markets in. You start to know where you're going to branch out, rather than just doing everything and going, oh, I'm not sure what's going on. Maybe you're a scalper, you're going, I'm going to scalp momentum stocks, for example. So maybe you set up a system that alerts you to stocks that are moving strongly, and you're there to scalp 10 cents, 20 cents, whatever the stock price is. And that's your job. You're like, I want to identify momentum. I've got these tools to help me identify momentum. And when I see momentum, I'm going to jump on momentum, quick on and off with a tight stop. That's all I do all day long. And so you never branch out into day trading indices or looking at the currency pairs or any of this stuff. That's just what you do. You are a specialist in that, and you've set up everything for that. Even your screens, even your alerts, even when you're at the screen, all the other stuff molds around it. Then maybe you say, right, I'm a swing trader. Okay, I like to trade momentum swing trading in Forex. And so you adjust the business plan to suit that. And that's why you can become a specialist in that, because you go, right, I need to screen these currency pairs at the end of the day. I need to strip out the stuff that I think's got opportunity, maybe put some resting orders in the prior overnight when I'm sleeping, so if I can catch the levels that I want, etc., etc., etc. And so everything then molds around the approach you're taking. It's like saying, okay, I run a restaurant. Well, that's fine, but do you run a burger bar or do you run a high-end Michelin star restaurant? Two very different approaches. One can make equally amount of money as the other, and they could be equally successful, but the approach is very different. The burger bar is about efficiency, it's about this, it's about that, it's about all that other stuff. Michelin star is about having the right chef, it's about having great service, it's about, we know there's differences in scenarios, there's no different in trading. But if you try and be both, you try and say, oh, well, actually, I do burgers, but at the same time we do fine high-end dining, you're probably not going to do either of them very well and sit in the middle and wonder why nothing's happening. A little bit for trading. Now, there's nothing wrong to say, hey, I'm going to do burgers really, really well. I'm going to focus on burgers being the best burger. We're going to have 4 burgers on the menu and that's it. Okay, now we might start doing hot dogs, for example. Okay, now we might start doing desserts. So you branch out and decide what you're going to do. Order away another chain and do more of that. And say, I'm going to have another burger bar, which will be going to a different market, rather than sitting in the same market and doing something different. So, bit of a broad analogy, but I think you get the idea. Think of your trading style, your personality, think of where the weaknesses are in your personality and what trips you up in trading, and then say, okay, do I need to take that into account and how can I narrow stuff down? Do I want to just trade? And I know that a lot of people get, I get a lot of pushback for this, mean reversion or momentum, and they say, well, I can do both strategy to strategy, and yes, fine, but my counter is, why not try focusing on one for a period of time? Why not say I'm only trading mean reversion? And that will mean that you don't trade some days, because a trending day is not for you. Then you go, fine, or you might have a resting bid in trying to catch up, trade a mean reversion move in that perspective rather than momentum following the trade, the inside out type trade. But that's okay, because it helps you focus down. So worth considering, guys. I don't have all the answers. I don't know for sure all these type of things, but I'm just trying to share with you what I think might help you out. Take care. See you next one. Keep the risk managed. Bye-bye.